What is going on, everyone? Welcome to Digital Goatz Academy, guys. It is 9:04 p.m. Eastern time, February 14th. Happy Valentine's Day to all the love goats out there, guys, man. I'm your host, the Digital Goat, guys. Welcome to Digital Goat Academy, and welcome to our segment. Specifically today, we're going to talk about exit strategies within the foreign exchange market. So anybody that follows me, definitely appreciate you guys as always. I know you guys may need a reminder for you guys constantly watching my videos, but number one, please make sure you guys like and comment on my videos. I definitely appreciate the feedback, but also hit that subscribe button as well as that notification bell so you guys stay up to date on all my content. But let's get right into it. Now I'm going to keep this very short today, guys, because exit strategies, it's not necessarily a strategy, but a lot of people don't know where to get out of a trade, right? Now, I want to talk about USD JPY because that was something that me and my community we looked at this morning, caught that crazy move up, and then I caught a little bit more riding it to the upside, guys. So I want to talk about areas where I would have, even with me already having this pre-made, where I would have liked to get out, guys. So that's going to be our main focus when it comes to trading today, just for this segment. Now, if we're looking at it from a pip standpoint, if you guys understand, like always talk about a percentage base when it comes to your account. So based off your account size, you may, you may look for longer moves, but again, looking at the market sessions and the day of the week it is, guys, Sunday, Monday, Tuesday, you should really be in scout mode, and then intraday to swing depending on who you are as a trader. But again, more bang for your buck if you scalp in the beginning of the week and then try to hold longer positions later on towards the end of the week, guys. But I know a lot of you guys, like I said, struggle with where do I exit without restricting myself to a pip count. Like, how do I just be concerned on, because we don't necessarily know where the market might try to pull back on us, or where it might try to reject or create support. So we at least have to have an area that we would like to exit out of the market, guys. So pretty self-explanatory with this USD JPY setup. But let's say I never had any of this information. I'm gonna delete it right here, guys, right? Let me make sure my audio is correct. I think you guys can still hear me. I think my audio is messing up. So if my audio is messing up, please let me know for my viewers out there, guys, and I'll try to correct it later on, but we should still be straight, right? So if I was looking for, let's even ignore this entry, right? Doesn't even matter as far as like entry or whatever, guys. No matter what, where would I be looking to get out in the market, right? So let's talk from if we took this sell from up here with USD JPY, right? Now, guys, you don't necessarily know how far it's going to fall or if this truly is a selling market, but you can make a decision based off of price action, right? So right here we see that USD JPY towards the end of the market reset, which was like 5 o'clock, it pretty much started becoming bearish. What was that? Like towards anywhere from 2 o'clock to 3 o'clock, started consolidating, broke out at 1800, which is pretty much 6 o'clock, guys, if you don't know military time, right? But say I was someone who wanted to take this sell. I see that it's consolidating, so all I got to do is wait for a short break and then a retest, guys. This probably would have been your break, and then you see it retested sharply back up. Let me actually zoom into that. So let's just focus on this. This is not a class about consolidation, but because we're looking at this, I'm obviously going to point out that this is consolidation, obviously, right? And we know how we should pretty much manage consolidation at this point. If we don't, we need to actually study the market a little bit more and study patterns and stuff, guys. But for the most part, if it's consolidating, it should break out and then give you a pullback, immediate pullback back into that zone, guys. So if you just see right here, you just see this was the break. The market obviously dropped down a little bit more, decided to push back into the consolidation zone and then fall sharply. Now, that was a good move. That was a good move for anybody that would have caught it. More than likely, people would have caught the move like in this area of 133.033. And then if you see, price dropped 48 pips, but I'm a newbie trader. I don't know what 48 pips is, but how do I know where to exit out of the market? Well, guys, you can start looking at wicks or areas of structure. So more than likely, if you're still new, you're looking at areas of structure such as support, resistance, so forth and so forth. So even if you weren't looking at areas, even if you don't have a pip count for you to exit out of the market, guys, you can start looking at wicks. You can start looking at structure base, guys. I definitely look at wicks for points of exits to get out of the market, just in case the market, maybe acting funny. I may have not accounted for news, anything like that. So this would have been an example for USD JPY, right? USD JPY, if I was looking to get out of this market and I'm on scalp, like I'm scalping today, guys, right? So I'm in scalpers mode today. I'm looking to get out the market. Okay, I take my position. We're going to pretend we took a position up here, right? Let's actually do it from here. Let's actually do it how we would normally. So I took a position from up here. I obviously want to, well, I'm probably saying that, okay, if I'm entering this trade, I necessarily don't want to try, if the market clears above this, it's probably bullish, right? Overall. So I don't want to stretch my risk to reward ratio. I want to put it directly above structure for the most part, guys, right? For the most part, get my clarification on the retest, this was the retest right here. Where do I need to exit? Well, the first spot I can look to exit is this immediate wick over here, guys. If you see it to the left-hand side, so let me just kind of highlight that. Where's my circle? Right here. This would have been one of your first positions. Well, it doesn't necessarily matter like the pip count, because again, it's still money in the market. So if we look at where our entry would have potentially been, guys, let's see how many pips that would have been if we were to exit out of this trade. 20 pips on the dot, depending on your entry, obviously, 19, 15 pips. Still not a bad move to say that, man, I was only risking 16 pips, but that would have been my first entry, right? That would have been my first exit. And especially how I teach, guys. I teach that, the market retraces 20 to 35 pips. So 20 to 35 pips consistently is how you want to move until you get your big breakout, right? So what would have been my next zone after that, right? My next zone could have been another wick, right? Another wick for me to exit. So let's actually type exit right here. First exit. If I didn't get out of this trade, let's say, again, only I'm making the notion that if I didn't get out this trade and I'm looking to make more than just 20 pips, right? That would have been my first exit. So, okay, I still am confident that the market is going to drop. Where would be my next exit? Another wick zone, guys. If you see another wick zone at 130, 132, 702, 700, whatever you want to say. Now, if we drop down for another exit, we will see that that's 34 pips. So this is your second exit opportunity. I hope this is making sense with everybody, right? Second exit opportunity, right? Now, if we still feel that, without a retrace back to entry, if we still feel that the market is going to sharply drop in the direction that we want it to, where it could be our next exit? Well, since we don't necessarily have structure until we get to the bottom of this, our next area would have been what? Now break it down to a smaller time frame and start seeing if you see structure within the market. So look at this position right here, guys. I want to see what this looks like actually. I want to see what this looks like once we turn it back to a higher time frame. So specifically this zone right here, right? Only reason being is because that's where the last level of structure was at, right? So what are we on, an hour? Basically a percentage of that wick. Let me see how much of the percentage of that wick would be, which was the last structure. So only almost 78% of that wick. Wow, that's actually good if the market was to continue to make its way down here. Because we look on the 45-minute, guys, this would have been our exit. This would have been our last exit. And then again, if we still feel like the market is dropping down, so our third exit, right? Third exit. Then again, guys, like I said, if we were expecting the market to continue to drop, we can't ignore these potential wicks, which are rejections. So our next area before like the market actually making its way all the way down to this next wick would probably be our next area. That would be our fourth exit. And let's see how many pips this would be. 61, 73, and then you're probably looking at like 100. So 115 times, I mean, not 115 times. So about 115 pips, guys. 114 pips from this position if the market was continuously selling. Now, I'm not saying that this market is selling. I'm just giving you guys a notion of exits that you want to look at potentially where the market may bounce or retest off of. So all these exits would still be valid, especially even if the market came back up here to retest and then sold off again. You see what I'm saying? So you have to find these points in the market. And if you look, they give you a decent pip count. So we didn't even throw out that we were looking for 35 to 40 pips. We were just looking at areas where could we get out of the market without feeling like, you know, the market's going to reverse on me or come back to entry. The market comes back to entry, guys. You don't want that to happen, obviously. You know, you want to make your money. If it has the potential to come back, then you get out of your trade and you re-enter at your entry if you feel like the trade is still valid. But we got to get more ready to understand that, you know what I'm saying, when I hit these points, these data points within the market, those are potential areas of entries and exits, guys. I'm gonna look at another pair where we're going to look at that, right? Look at another pair, because what ends up happening, if you see what happened with USD JPY today, right? So let's actually do it in reverse. Let's actually do all this in reverse and go back to what I originally had, right? And I mean in reverse as in the buying move that happened today. And the reason why I want to talk about it, guys, because I feel like a lot of people didn't make the smart choice in the market. I'm not sure, but let's be honest, guys. We know a couple of traders, you know what I'm saying, ourselves, that may have not, you know, managed the market properly today. So anybody that was trading USD JPY or just looking at the dollar, it made an aggressive move to the upside. What was that? 8 o'clock? Yep, 8:30. Not 8:30 on the dot, like pretty much 8:15, something like that. Let me see. Yeah, like 8:15. So if you see just in this zone right here, if I just box this up, this candle, this funny looking aggressive candle, guys, right here. Trying to get as much as it without like confusing. Let's turn this orange. And if we see this candle, right? Now, I obviously have exits or, you know, targets that I'm looking for, targets, exits, whatever you want to say, guys. So right here, the market got extremely bearish, right? Extremely bearish. Well, I went for a pip count, but even if I didn't go for a pip count, areas that I would have been looking to exit out was like previous levels of resistance. So if you just kind of scrunch up or previous lows in the market, guys, if I'm looking for it to go up, right? So this was my entry. My entry was 132, 114, right? So my first exit, if I didn't know, if I'm a new trader and I don't know where to exit, one, I had this information right here towards me, obviously, right? That would have been one of my first exit. Even though we have this, and I'm gonna make this black, guys, so you know that these are the exits that we're talking about, even if we didn't know about a pip count, right? This would have been my first exit. Why? Because that's structure right there. Well, if I draw this all the way out, I'll see that this structure actually meets up with what? A previous low. So whether I chose this side or this side, that could have been my first exit out of the market if I felt, well, based off of where I'm looking to collect my profit, right? And if we look at this, this is almost 20 pips, 19 pips. I'm probably off by the way I'm measuring it, but 19 pips, right? So where would have been my next exit to go off of? Well, you can do one or two things, guys. You can respect the low, which is probably a better position. This was the next previous low, right? And if you look, it matches up with my 25 pips. That's 25 pips. Or you could have said, you know what? I want to exit at this level of resistance right here. If you guys see, let me draw an arrow for you guys so y'all can see. Right here, this level of resistance right here. So if you guys see that, that would have been another one of my exits, right? Now I could do so forth and so forth as far as like previous lows to the left of it or previous highs until we get to a true level of resistance. So if you guys look where the market actually sold off from, where it, before it actually rose back up, where's the next level? The next level is right here, pretty much in that resistance zone of where the market came up to this resistance and shot all the way down and actually blew through our stop loss if you didn't exit out of that market, guys. So even if you're still new, green trading, guys, you still have to have potential exits. Well, you still have to have exits out of the market that isn't just saying that, because if you didn't have like exits, if we didn't have exits that were saying like 25, 55, or just smaller positions for us to, you know, be done with the trade, if we had just only said that, man, so imagine if I had not had these exits, right? And I only had, this is like 88 pips for my entry. I didn't change that, so my bad. So 88 pips. Now, we could have gotten it on the back end, but guess what? My stop loss was down here. I think my stop loss was like 30 pips or something like that. If I didn't have exits, that would have put me out at pretty much levels of previous lows or levels of previous resistance, and I was aiming for the highest position possible, I would have been in profit just to lose all my money, guys. So you see how important that is in finding like an exit, having an exit strategy out of the market, because this was powered by news. This orange candle, guys, or orange box was influenced heavily by news. And if you didn't have an exit, you pretty much got wiped out. And it was almost like you were in the market for no reason. So even if I'm still green, I still have to find a place to exit out of the market. I hope that's making sense, guys. Again, anybody that needs help, guys, or anybody that's like, you know, trying to figure this thing out when it comes to foreign exchange, don't hesitate to reach out to me, guys, at the_digital_goat on Instagram. But again, guys, if you want to DM me on YouTube, I think we have messages on YouTube. I haven't even gotten a message, so I'm not sure. Or reach out on the comments, guys. I have a private Discord that I'm showing people how to properly navigate through foreign exchange. It's new to everybody, guys, so you don't have to be somebody that's worried. And if you have, you know, a community, that's cool. I'm just providing a service for you know, newbies and veterans within trading, guys. So really, I just wanted to keep this kind of straightforward and use something that we used today, which was USD/JPY, in order to exit out of the market. And it played favorable for us, not to mention because we exit out of the market at those areas. Let me show you. So because we exit out of those areas, guess what? When the market came down to our stop loss, to stop, hunt, and wipe out everybody that was still in the trade being confused, we had another opportunity to jump in this market and actually get the full blunt force of the entire move. So instead of just turning it to 55 pips or 25 pips, guys, you had an opportunity three times to jump in this market and make anywhere from 50 to 80 pips, guys, just by identifying, one, your exits, but also waiting for the market to correct itself and then make a move from there, guys. So I hope you guys find value in this video. I left it pretty simplified and very vague because, again, it's going to make sense once you guys do this on your own. So again, guys, like I said, I always hope I'm providing value to you guys. If so, please hit that like button. Make sure you guys subscribe if you always are forgetting. Hit that notification bell. Always comment as well too, guys. I appreciate your feedback. And as always, guys, see you guys at the top because we are taking everybody to the top with us in 2023 and beyond, guys. This is Digital Goat. I'm out. I'll see you guys tomorrow for Digital Wednesdays. I may change that up. I'm actually going to start looking for live sessions in the morning to be more favorable for people that's probably having like late nights at work and stuff like that. So we are transitioning to probably a morning style of trading, guys. So I hope you're excited behind that. I am. It's going to be intense. It's going to be big. Also, look out for our first Digital Goats retreat coming out soon, guys. So I'll dish that out on YouTube and on the Discord channel for anybody that follows me. And I will see you guys tomorrow at 7 p.m. Eastern. Again, if I do change things up, it probably won't be this week, but I'll notify you guys either this week or towards the end of the month. So see you guys tomorrow as always. Be cool, be great, be fly.